Okay, so we are back again. Good evening, everyone. 21st of April, Thursday night, Traders Club session. What we'll be going through tonight with no news, no big news to be in the horizon to be released at 8:30, 9 o'clock. Gives us a bit more time to go through some trade ideas. In the shorter term, I'll be looking at H1 trades, M15 trades if it's possible. And I'll be also sharing with you some of the trades that I got into today. If you have any questions, Traders Club members, feel free to put it into the chat, ask the question, unmute yourself at any point in time and ask the question. If you got a trade to review, I'll be doing that for you as well, right? So first off, as usual, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of myself. So please remember to do your own analysis prior to entering any trades. Right. So with that said, now looking at the news or what has happened or what's likely to happen, you can see that at 8:30, although we do have the US unemployment claims to be released, it's a weekly number, so not too concerned about that. And then nothing much else for today. I told you this morning already, Fed Chair Powell speaking, but not likely to move prices too much. Only later tonight or early tomorrow morning on Friday, 12:30 a.m., 1 a.m., we do have Governor Bailey from Bank of England speaking, ECB President Lagarde, and Fed Chair Powell speaking at the Washington conference, but unlikely to be a policy, talking about possibly increasing rates and all that kind of stuff. So don't think it's going to move prices too much as well. Tomorrow we do have PMI numbers to be released. What looks like now a good idea that it's going from 56.9 to 54.6, services PMI from 56.1 to 55.4 for the Eurozone. Might be some good trade ideas coming out from that. We do have the pound retail sales numbers staying at minus 0.3%, and a whole bunch of PMI numbers coming from the UK as well. 55, slight increase to 53.9, 62.6 dropping slightly to 59.9. So a whole bunch of news, and I'll tell you about the CAD tomorrow when we do CAD. Apart from that, nothing much else. On Monday next week, Aussie and New Zealand on holidays because of Anzac Day. And then some CAD news, and then on Tuesday, back to that. I'll tell you more about all that next week. So you can see that we don't have a lot of news to be released, big news to be released, not likely to move prices too much, but markets have been crazy, right? Markets have been crazy. You can see just here, Euro dollar moved 35 pips over the last 6 hours, pound 23, Euro pound 41. So quite significant moves over the last 6 hours or couple of hours. Why? A lot of talk, not big news release, but a lot of talk that caused the prices to move, right? That caused the prices to move. So talk, for example, here, we were just sharing this on the platform as it happened as well, right? So here we do have the ECB rate hike possible in July, right? So I've been telling you over the last couple of weeks, since the last ECB press conference where they were not looking at, or they were not saying that they were not looking at, they were saying that they needed more data, they will wait and see. They will take action, but they will need more data to make sure that they know what, or they're taking the right action. 5 hours ago, ECB rate hike possible in July, right? It will depend on data. But once you talk about rate hikes, what happened to the euro dollar? Right, I'll show you what happened to the euro dollar straight away within that one move. I'll show you on the H1 time frame. Right, that moved straight up. It went up a good, within 2 hours, a good 91 pips, almost 100 pips towards the upside, but got resisted by this 1.0944 level and then started turning back down again. So that news about possible rate hikes in July, bringing forward the rate hike, brought the euro dollar up. Together with this, policy rates could turn positive this year. So talking about rate hikes as well could turn positive, bringing the euro dollar up as well. So those were the two news. You guys normally like to ask me what caused all these big moves. These were the two news that pushed the euro dollar towards upside. And because the euro dollar went up so much, it brought the US dollar down, right? About 50% of the calculation, 40 or 50% of the calculation on the dollar index is based on the euro dollar. So because the euro dollar went up so much, the dollar index did that drop. You can see it's almost at the same time, 2 and 3 o'clock on the euro, 2 and 3 o'clock. Inverse relationship, this shot up, the dollar index shot down. Totally wipes out my analysis this morning where I was saying that it was likely to climb and move across. But what happened was that it started moving back up again, right now at this above 100 again, at 100.0942 now. Okay, so what I think is likely to happen here, we might see it drop back down again, looking for it to find a base at 100 before possibly pushing higher. That's the same as what's happening with the euro dollar, looking like it's climbing up a little bit. I think it's going to climb up, but all the news here is still a rumor. It's still in July. We're only in April now, still a couple of months to the news. So still a rumor at this point. A lot more, and in May, we're likely to see the FOMC increase rates. So going to be a bit more news to be happening before this possible euro increase, possible euro hike, right? So that's why we saw that shoot up, but I think that overall we'll still see the dollar come back into strength. Just before this call, just before we started the call, I was just a bit shocked with this. 22 minutes ago, the news came out. Japanese yen could weaken to 135 per dollar in the very near future, right? So if I haven't even read this news yet, it says Wells Fargo, it depends on the Bank of Japan's policy and how the divergence with the US policy as well, because if the US FOMC does continue to raise rates, they do that 50 basis points. I think they have taken 75 basis point off the table, but they think about 50 basis point. If they do push that along, then we're going to see dollar getting stronger with yen not doing anything or Bank of Japan not doing anything. That is going to push the US yen, or likely to push the US yen towards that 135 per dollar. That's why that headline is there, depending on the difference in policy. But bear in mind that the Bank of Japan now or recently have been saying things like at 130 they'll be worried. If yen weakens to 130 per dollar, they'll be worried. And also the finance minister has come out and said a weaker yen is bad for the economy. Has advantages and disadvantages, but then it's bad for the economy. So I think that for the US yen to get to 130, we're going to see some kind of intervention come around. But if the US does continue raising rates, then we're very likely to see that 135, but I think it will be I believe that it'll be very short-lived at 135. Most likely we're going to see it go towards 135. Massive intervention comes in from the Bank of Japan to try and bring it back down, because very, very high level at 135 for the yen, right? Any other news that we were looking at before? Right, no other news. Okay, and then we had New Zealand. I told you about this morning, 32-year historic high CPI number at 1.8% quarter on quarter. So with that, all right, what can we look out for? This is the dollar index on the H1 time frame. I was very tempted. I was scrolling through my charts throughout the day. We've seen a lot of movements, but I only entered two trades, two good trades, and then I stopped because that move in the dollar, that big drop and then a bounce, and then possibly looking like I'm hoping that it's going to find a base at 100 before bouncing back up again. A bit of uncertainty happening in the dollar index at this point, which translates to the charts, right? So now looking at the charts, this is the Aussie dollar on the H1 time frame, right? So what we saw today was the Aussie dollar started off pushing higher. I can tell you that for my own analysis, I was looking at it, I was saying, okay, if the Aussie dollar does break above that high point, yesterday's high point, I'll be looking to buy. Can I look to buy it up? Right? I'll show you. Can I look to buy it up towards this 0.7484 level? Right? So I was looking for this trade as a possible, level. Oops, that doesn't work. Okay, I was looking at that trade as a possible level. 20 pips, go for a tight stop loss at about 20, I can't see, 20 pips as well. A 1:1 pushing up towards that recent high point. But what happened? It went up. It looked like it was ready to buy it up. And then next moment, our close didn't close above the recent high point. Next hour came back down, totally wiped out my trade idea of whether to get into that trade or not. So the next couple of hours, it came down. Then I thought, wait, if it can break lower, if we're going to see that dollar strength bounce back up and continue, can I sell this down? Right? Can I sell this down? I was just talking in the office here with a colleague saying that, hey, if the Aussie dollar does close lower than this point here, can look to sell down. And what happened? This hour starts, almost looks like it's forming a base. Looks like it's bouncing back up, not looking to sell at this hour. What I would say is that I would wait. More likely, I'll be looking to sell the Aussie down. I'll be waiting for it to break below that 7425 level. So for it to break below that 7425, a little bit aggressive at that point. I think that 7420 will be reasonable, but the safest one will be don't enter a trade now. Wait till about maybe 9 o'clock. Look to see whether it's going to break below 7408 or 7409 or even 7400. All right. So this will be the safer one. I would say H1 time frame. If the dollar does move stronger, we could be looking for that trade down about 40 pips, stop loss, about 20 pips, a 1:2 risk-reward ratio towards the downside, but it needs the dollar to, bounce off this 100 level, move up towards this 100.40 level, then we're possibly going to see the Aussie dollar drop below this support, goes below 0.74, look to sell down for 1:2 risk-reward ratio towards the downside. This will be a short-term trade, an H1 trade. If it does bounce up, I wouldn't be looking to buy it up at this point. Some of our club members here might be looking to buy up. For example, buy up from this point, 20 pips, and then have a stop loss about 10 pips there. Possible, but it's not one of the trades that I'll be looking at. It's just a bit too medley, too much things to consider. I wouldn't be looking at that, right? So looks like the Aussie might form up at 9 o'clock or 10 o'clock. So pay attention to that one. So with that, then looking at the New Zealand dollar, right? New Zealand dollar, I'm very happy with that trade. We're talking about this pushing higher. It did that. At this point right now, I would say that it's going to be a little bit different than the Aussie dollar. I wouldn't be looking or to sell or to buy the New Zealand dollar at this point, just because it's just that far away from the 6740 level, and also that far away from the 6842 level. So it's doing the same thing. It's bouncing around between 6772 and 6809. I would prefer the Aussie than the Kiwi dollar, and they move quite similar. So I'd rather look to trade the Aussie than to trade the Kiwi. Probably give the Kiwi a bit of a rest for tonight, right? Don't look at trading the Kiwi tonight. Look at the Aussie more. Sorry, I was just thinking there was a news to be released. Oh no, that's next week. Okay, so not too concerned about that. So there's the Kiwi dollar and H1. I would prefer Aussie to Kiwi, so don't worry about Kiwi. Then looking at the euro dollar. Wait, I have the euro dollar there. Then looking at the euro dollar, I would still like to sell the euro dollar down, right? I would still like to sell the euro dollar down. Obviously, this was a missed opportunity because it reacted to that 1.0944 level and turned down. If you could have traded that down, it would be great. But with that 100 pip move over 2 hours towards the upside, there was no way that I would normally be selling this down. So I would still be waiting for the euro dollar to track lower. In this case, what you could be looking for is euro dollar. This would be a super short term one. If you're a bit unsure, if you're a bit new to it, then I would say don't do this. But if you're a little bit more experienced, you could be looking at the M15 time frame. M15 time frame, look for it to break past the current low point, right? That 1.0876 level, so 1.0875. What you could be looking for on M15 trade, so this will be short term, 1.0875. I would say stop loss very tight, 16 pips there. Take profit 20 pips, a 1:1.4 risk reward ratio towards the downside. This will be a short term scalp, almost like a scalp down towards this level. You can put your take profit at 30 pips, but be ready to close anywhere in between. This will need for it to break past that point. So if we look at the dollar strength come back into play, that could be a quick trade that you will be looking at on the euro dollar. All right, so I'm giving you trades that are on the H1 time frame, a little bit longer, medium term, short to medium term, M15 trades that could be quite short term, quite quick. Looking at the pound dollar. So usually when I look at the euro dollar, then I look at the pound dollar because they have moved quite similarly. Pound dollar, I don't know why we have all these lines. Let me just clean this up a little bit. So pound dollar, we're talking about this past couple of days that we're looking to buy it up, right? And at that point, you have that both buying and selling, that buying opportunity towards the upside. One trade up, two trade halfway there, now turn back down. So pound dollar, be very careful of this 1.3059, 1.3060 level, and especially this 1.3 level. I remember on Tuesday night, right? This was Tuesday night here. At 8 o'clock, we had our call. At 9 o'clock, it shot all the way down. We were super excited in the platform. We're like, hey, pound dollar looks like it's ready to sell. But remember, we were saying that if I zoomed out, we said, if it doesn't break below this 1.2983 level, like what happened here on the 8th of April and what happened here on the 13th of April, if it wasn't going to break, if it doesn't break, it's going to bounce back up towards at 1.3060 and bounce back up, even back towards the 1.31 level. So it actually did happen, the same thing. Tried to break, came very close, didn't, rejected this level, went up towards 1.3060 and almost towards the 1.31 level, came towards 1.3090, so 10 pips away. So at this point, what to expect for the pound dollar, I would say. Actually, no, let me get this a little bit more interactive. What would you guys say? Put it in the chat. What would you do on a pound dollar on the H1 time frame here? Looking for you to type it in the chat. What would you do? Would you be looking to sell it down towards 1.30? Would you be looking to bounce it back up towards 1.3060? Or would you be looking to sit there and do nothing? One to sell, retrace and sell, sell. Good stuff. All right, good. So I would actually sit there and wait out. I actually like Vernon's answer, retrace and sell, right? So don't look to do anything on the H1 time frame right now, because if you're looking to sell it down at this point or close to this point, then typically what you should be looking to do is, if you're going to sell down there, your take profit is 20 pips at the most. You can't have your stop loss at 10 pips. Is very, very tight, right? So normally I'll tell you my stop loss usually 15 to 20 pips or 30 pips there. At 10 is too tight. It's going to bounce a little bit and hit your stop loss. So if you did put a 20 pips, it's right in the middle. If you put a 30 pips, then it's not a good risk to reward on the pound dollar. So I wouldn't be looking to sell down at this point. What you could also be looking to do is go to the M15, right? Look, see whether it's going to break. I think that because of the recent move, looks like it might bounce back up. So what I would be looking for is what Vernon said is it going to bounce back up? Test that 1.3060 level and reject, right? We've seen that go up, test and reject to turn back down. So what you could be looking for here will be a selling opportunity below 1.3060, stop loss about 15 pips, take profit towards this current point here, about 20 pips, or almost 1:1 risk reward ratio towards the downside, right? If you didn't want to wait, then now you had to wait, right? I was going to say, if you don't want to wait, then you sell down, but you still need to wait for it to come down towards this point. Then from this point, look to sell again about a 15 pip and a 20 pip take profit below this 1.30 level. So at this point, I would say stay out, don't do anything yet. Let it break lower, break that support, sell down, or let it bounce back up, reject that resistance level, then sell down again. At this point, looks like it's going to track lower, then you sell down. Right, so just doing a quick check of the dollar index, hasn't really pushed up higher, so I wouldn't be rushing into any trades yet. So that was the pound dollar. Now looking at the euro pound, that's quite interesting, right? So euro pound, because of how the euro dollar was pushing higher, we saw straight away the euro pound pushed, right? At 2 o'clock. 2 o'clock here started pushing up towards that 0.8351 level, 8350 level. So what I would say is that for the euro pound, right, we anticipate pound dollar to be dropping, right? We're either it's going to bounce back up and drop, or it's going to continue down and drop lower. If the pound dollar does drop, that's going to push the euro pound up, right? It's going to push the euro pound up. And then again, looking at the euro dollar, right? We're seeing it sitting across. We're hoping M15 for it to drop lower, but because of that recent news, if it does sit across, it doesn't want to drop and it just sits across or push up a little bit higher, then I think that you might have a good opportunity on the euro pound. Good opportunity to buy on the euro pound because it's pushed up. If it does break above that point, right, I would say that you have about a 30, there you go. So if it does go back up above today's high point, again, you need to be patient for this one. If it goes up above 8362, then you'll be looking to buy it up towards 0.84. You have a 35 pip take profit, about a 20 pip stop loss, a 1:1.6 risk reward ratio towards the upside for the euro pound. So quite a good trade idea there, but it needs the euro dollar and the pound dollar to work out perfectly for this euro pound trade to push higher. Can you sell it down? I would say yes, you can do a repeat of that, but it depends on, is the euro dollar going to drop? If the euro dollar drops significantly, then we're going to see this push down. But I think, don't jump in too many trades. We're talking about many trade ideas. You need to be able to choose which ones you're going to get into. I think this will probably rank a bit lower unless it can break up that point. All right, so it comes to my favorite pairs for the last couple of days. US yen, right? So we spoke about this, and I think it's going to happen soon. Given the dollar pushing higher, look at that dollar getting stronger, pushing above. If we do see that continue, then I would say US yen straightforward, same analysis holds. Break above this 128.50 level, look to buy. No M15 trade here. H1, look to buy. 70 pip take profit, 30 pip stop loss. What I would say is that put your take profit at 70. You might want to consider breaking this trade up 30 to 30. So that's what I've been doing for the yen pairs, because it's at a very high point. Historic high. I'm not going to zoom out because I've been doing that all the time. Historic high points at 129, 130, 128 even is a very high point. So I would say for the euro yen, pound yen, and US yen, keep your trades a little bit more controlled. Every trade I get into now for the yen pairs, straight away 30 pip stop, 30 pip take profit. If I can't put a good 30 pip stop loss on it, I'm not getting to trade. If it has a good 30 pip take profit and 30 pip stop loss, like that, right, like that, then I'll get into it, because I know that if it breaks above this point, it can get up to that 30 pips quite quickly, as what happened here, right? With break above, within one candle, you get there, and then you're going to sit across, or it's going to bounce back down a bit before the next trade again. So imagine if you did the same thing. You got in 30 pips, made a profit, got out, and then your next trade goes in again, 30 pips there, take profit, again another 30 pips, right? So I'll show you an example. Let's move some of the stuff around like that. So you could be looking at those are the kind of trades I've been doing for the last couple of days for the US yen and the euro yen today. 30 pips, quick hit, get out, reevaluate. If it breaks past the recent high point, then I'll get in for another trade, and then 30 pips, get out. That's it. 2 trades in a day, done. 2 trades very quickly, and then I'm done, right? So you could be looking at that again for the US yen. So look for it to move up that 30 pips, get out, and then again repeat for the next 30. That's how I'll break it up. All right. Any questions at this point so far? Nothing yet. Okay, good stuff. Now let me share with you the trade I got into on the euro yen. Right. So I did get into a similar trade that I spoke to you about this morning. Euro yen at 1.394. No, I got in a bit later. I missed out this trade. So euro yen, I was looking at an M15 time frame. All right, I got in at 1.3940. Okay, let me just move this one away. Okay, I got in at 1.3940. Same thing as that candle was pushing higher. I got in 30 pip. Oop, 30. Wait. I'm losing. Oh, okay. Look, Okay, wrong numbers. 30 pip stop loss, 30 pip take profit. That was the first. That was my first 15-minute trade I got into, and you can see that in one, two, three, 4 candles in 1 hour hit my 30 pips and I got out. They took my profit and got out, right? So then the next trade I got into was 1.3968. So 1.3968, I saw that when I got out, it retraced back. Oops. When I got out, it retraced back down. So 1.3968 was that point. Again, a 30 pip stop loss, a 30 pip take profit level, went up, hit my take profit, and then I was out. This one happened a lot faster. This was a quick trade, 2 candles, and it went up, hit my take profit. So that's it. I'm done for today, right? 2 trades, 30 pips, 30 pips, 60 pips, done. And then what happened? I was very happy. I actually sat there thinking, if this does break higher, can I get into another trade? Just because of the momentum that it was pushing up, and the euro dollar was pushing higher as well, but didn't. So I actually had a line on the, I had a line at 140. I was saying that, okay, if it breaks above 140, it will be breaking above a round number resistance level, then I could say I would look to buy it up, right? And I was looking at it on the H1 time frame as well. I was looking at M15. If it broke above, I could look to buy it up. But I was very happy. And this is why I put lines on my charts as well. Just a visual there. It needs to break above before I would look to buy. I got very tempted on this one, right? It was pushing up. It was trying to break, didn't break. Then it turned back down. So I was very happy I didn't get into that trade there, because what happened, as it didn't break 140, it rejected that level, it turned straight back down again. So right now, euro yen at this 139.53 level, I would say don't enter a trade on the euro yen at this point. Why is it dropping? It's not because of the euro dollar. So euro dollar is pushing higher. The US yen is dropping. So US yen is dropping because dollar index is dropping as well. So because the US yen is dropping, this trade will still wait. We still have to wait a lot longer for this trade. But because this is pushing lower, that's pushing lower. So don't enter a trade on the euro yen at this point. I would say on the M15 or on the H1 time frame, I would like to see it drop towards that 1.39 level, then look to buy it up again. All right, so I'll show you this on the H1 time frame first. The momentum, that rejection of 140, that pin there, looks like formation of a pin now as well. I'm looking for it to turn down, and you can see it happened here at 139.59 or 139.60 level. Didn't like this level and it started dropping. So if that does happen, I want to see it drop down to this point before I'll buy it up. As a trade idea there like that, I'll look for it to drop down, bounce at about 139.25. You can buy it for 60 pips, stop loss at 30, or you can do the same as what I've been doing, 30 pips stop loss, 30 pip take profit, break up that trade into multiple trades, right? So still looking at that as a possible trade, unless it breaks above. So if from this point and it turns green and pushes higher, I wouldn't do any trades. I would look for it to break above 140 before I buy. If we see, US yen sitting across, not doing too much, and if we see the euro dollar pushing higher, then you might want to, I might consider doing a repeat of this afternoon on the M15 time frame to do that. But very unlikely. I think we're more likely to see it come down towards this support bounce back up and look for that buying opportunity back up again, right? So I'm super happy with those two trades that I did this afternoon, 60 pips there. Next one, pound yen, right? So pound yen, we were talking about this morning, right? I was saying that you could be looking at short-term push towards the upside. It didn't happen, didn't close above that 167.68 level, so didn't close. That trade is now invalid. What I would say is, looking at the pound yen on the H1 time frame, same thing, doing the same thing as the euro yen, looking like it's going to push lower because of what's happening here on the US yen, right? So I'll show you US yen H1 time frame. So US yen doesn't like that level, pushing lower. So I think we're going to see that drop a little bit more, possibly towards the 127.71 level. So I'm looking for this to drop as well. Same as what I told you on Tuesday night. Same thing, I would say I'll wait for it to drop towards that 166.30 level. Look for it to bounce off this level, then look to buy. Right? And I wouldn't say buy all the way back up there. It's almost 200 pips towards the upside. Again, be a bit more conservative now because it's so high. You know, at 166.50, above 166.50, look to buy. Stop loss about 30 pips, take profit about 70 pips, 1:2 risk-reward ratio towards the upside. First decision point will be about 30 pips because of what happened here, and also this couple of times here. So I say if it drops, you could do a 30-30 and then another trade, or you could do a 30-70 because of these points here, and then decide at 30 pips whether it has momentum to push higher or you want to get out of the trade. You know, because it could just do that and push straight up towards the 70 pips. So target the maximum, but be ready to close out your trade early if required. Then CAD has been very interesting. I know just sharing that CAD was not very nice to see in there. But you see, CAD, when we spoke about it on Tuesday night with the news, right? So coming back to the news on Tuesday night. Okay, no, was it? No. Wednesday night. So we're preparing on Tuesday night, we're preparing for the CAD news. CPI number, so inflation number came out, was 1%, expected 0.9, came out at 1.4. So a very strong, well, very strong CPI number, high inflation on the Canadian front. So what does that mean to the Bank of Canada? They're more likely to look for further rate increases to try and stem or slow down that inflation number running out of control. So if CAD interest rates, or Bank of Canada is likely to increase interest rates, what's likely to happen? CAD likely to strengthen. That's why we saw that move towards the downside. There was a good 26 pips, could have gone to, I don't know why we didn't do a 40 pip, but we did 26 pip there because of that straddle for the news, right? So with that straddle, you would take away that. That was the first trade towards the downside. That happened last night. So that happened last night about that point there. So actually, this was before the news. This was on the 20. Oh yeah, this was last night. This happened before the news, and then it started dropping when the news was released. Actually, this was before the news. So the news was released at 8:30. So at 8:30 on the 20th, it's about there, right? So that news. So this was not the news. The news was here at 8 o'clock. So that was the move that you could have done on the CPI number. So about 20 pip stop loss, 25 pip take profit towards that 1.25 level. right? So that would have been straightforward. You could have done a pending as well, or buy and sell order there for move towards the downside. At that point, right, if we did a session on Wednesday night leading up to this news, I wouldn't even have a buy and sell order, right? I wouldn't have a buy and sell order. Why? Because it's been trending down before the news since early on 20th of April. It's been pushing lower. It's already dropped leading up to the CPI news. It's already dropped a good 89 pips, almost 90 pips towards the downside. I wouldn't have a pending order to buy it towards that resistance. I would say, okay, I'll put a pending sell for the news to be released. If it's strong CAD news, then just a quick trade towards the downside, towards that 1.25 level, get out, right? So remember, we always follow that trend, even when it comes to news on which pending trade or pending order to apply to the pair. So with the CAD right now on the H1 time frame, okay, before that, this will be a quick preview of what I'll tell you tomorrow, is that you can see the CAD, if I zoomed out, at 1.25 level here, and if I did one more line below this point at 1.2459, right, you can see that it's bounced once, bounced a couple of times here, and then also at this point here, bounced here, broke a bit, and then bounced straight back up. And now we're at this similar position where it came down, tested 1.2459, 1.2460, now bouncing back up. So I'll be very careful with trying to sell the yen, trying to sell the CAD down further. You can see that it's found a very good base between 1.2460 and 1.25. So I would say, look for it, wait for the CAD, stay out of it until it can move up and break above this 1.25 level. Let it go if you want to be extra safe, right? So I always give you a safe and aggressive view. Extra safe view will be to let it go towards 1.2523. Then your take profit about 40 pips, your stop loss at about 20-30 pips, a 1:1 or 1:1.6 risk reward ratio towards the upside for it to bounce back up. So I'm looking for something similar like that, right? For it to bounce back up, if it breaks above, then look to buy it up. That's the slightly safer view. The slightly more aggressive view will be to get in a bit earlier at about 1.2510. So not a big difference, about 10 pips earlier. Oops. About 10 pips, what am I doing? At about 10 pips earlier. This way, stop loss about 20 pips, take profit about 50 to 60 pips there. A 1:2, 1:2.5 risk reward ratio towards the upside for the US CAD, right? This is on H4 time frame, just to give you a bit of a preview of what I'll tell you tomorrow. Tonight, same thing. I don't think this will be something that happens tonight. I think that tonight we're going to see it sit around and fluctuate at this level because no big news happening tonight, right? But we do have CAD news tomorrow. Retail sales numbers for the CAD month on month was 3.2, expected a minus 0.4, right? Core retail sales 2.5, expected 0.4. So if we do see that number, then we're going to see that weaker CAD, slightly weaker CAD or weaker CAD to push it towards the upside. All right. I just saw a question for Euro Yen. When you say break, do you mean it needs to break and close above 140 before you buy, or just break? No, it needs to break and close above. So that's a good question there. Euro Yen. Sorry, Vernon, were you referring to that 140 level, or were you referring to which one? The 140 that I was talking about? Yeah. So yeah, I needed it to break and close above. So in the view of, as an example, I would want it to do that. If, for example, if this line was 140, I want it to close above. Or let me give you a better example. If, yeah, in this case, let's say 139.70 was the level I said it needs to break and close above, then I want this candle to look like it. I want it to break and close above before I'll get into a trade for that move towards the upside. So that's why I didn't get into a trade. I was looking at 140 there, came, didn't do anything, turned back down, touched, didn't close above that point. So I didn't enter a buy, which I'm very happy about. Right, does that answer your question there, Vernon? And also the gold, right? So gold bounced, came down to this point and bounced towards, now looking like it's going towards the 1950 level. We were just talking about this on the club platform as well. I keep referring to a club platform because I don't know whether you guys are reading it or you're catching the news there. I'm actually doing a bit of a write-up about this. Actually, can I find my write-up about this? Again, if you're not on TradingView, or if you are on TradingView, you should find me and subscribe. All right, so my analysis on gold, I was actually looking for it to push down because of the momentum, because of that 1957 level. But what happened was that it came down and then now it's testing back up. So it's tested slightly and then now it's pushing up. What's very interesting, and I'm doing a bit more detailed study on this, is that gold is typically a hedging tool against inflation. When the cost of living increases, the value of gold should increase. But what we're actually seeing now is that all that talk about gold, about inflation being very high, but what we're seeing is that since the 18th of April, gold hit that 2000 level and then started turning down. So there is that relationship which is not working. Supposed to be inflation high, gold goes up, but what we're seeing is gold dropping now. So I was saying that look for it to retrace towards the 1934 level, which is just here. Then look for long-term buying opportunities, right? So same thing, look for that point before buying back up, which is what's happened very quickly there. And also if it breaks above this 1957 level, look to buy it up again. It should be going up because of the way inflation has been moving, but it's been dropping. So I'm looking at that divergence. It should be going up. So I'm looking for buying opportunities for the longer term. Yes, so the following on question from that, why 140? Why 140 on the euro yen? It is a psychological level. It's a round number level, because if I did this on the weekly time frame, right? It's terrible to see right now. Okay, so if I did this on a weekly time frame, you can see that at 140, I didn't actually refer back to this points, right? But this is in 2015, it hit this 140 level 1, 2, 3, 4 times on a weekly chart, turned back down. It broke above in October 2014, September, tested, turned back down, tested, turned back down, bounced around at this level and then broke above, tested here before bouncing back up again. So every time it's a round number, especially in such a historic high level, the round numbers play a big part into forming a resistance. So this was way back then, so I didn't refer to that 2015 chart at that point. I was looking at it more on the current, being a nice round number at 140. That doesn't break above, don't look to buy. Only when it breaks and closes above, then I would look to buy the euro yen. Super. Anyone else with any questions since we went on the other charts that we went through? Quite a few trade ideas. At this point, a lot of trade ideas are all quite short term because it looks like, especially on the yen pairs, historic high levels, a lot of talk about, yen can go higher, but if it goes any higher, it's bad for them. That's one idea. And then also with talks starting on the euro dollar, with further rate increases, Reserve Bank of New Zealand talking about further rate increases, Bank of Canada looking like rate increase. A lot of movements at this point. I think the next big move might be on the pound because the Bank of England seems to have been quite quiet. I think that if we do hear anything coming from the Bank of England, especially in terms of rates, they have the inflation numbers very high as well. So if we do see anything in rates, then we might see the pound dollar being the next big mover, especially towards the upside. But we're all still keeping in mind the possible 50 basis points increase from the FOMC in the May meeting, and also whether they're going to indicate, consecutive 50 basis points increase, or whether you're going to surprise the markets with a larger than 50 basis point increase. So I think overall, we're still looking at that dollar strength, or waiting for that dollar strength. Right now, dollar again retracing back down towards this 100 level. There's not a lot of trades happening at this point. But we zoomed out, you can see that the last time, I need to clear out those arrows, it looks so messy now. But the last time it got to this 101 level, it didn't get to 101 easily either, right? So got up to 101, came straight back down towards 98, 94, bounced back up, came back down, came close to the 100 level and turned back down. That was in 2020. And then before that, very rare that we see it. It was only back in 2016, 2017, where it broke above that point. When it broke above this 101 level and went higher, right? So can a dollar go higher? Yeah, definitely, right? It's done that in 2016, 2017. It's done that in 2020. Can it go up? Possible, but it's not going to be a straight line upwards. It's going to zigzag, like how my arrows are pointing all the way up and down. All right. So with that said, I think that in terms of trades, not a lot to be jumping into tonight. If you're, this week, especially if you have been jumping into a lot of trades, you're probably trading too much. If you're holding on to trades for too long, probably will get hit by the volatility. I would say keep your trades a little bit more short term. 1 or 2 good trades, like the euro yen I was just sharing with you, 2 good trades at 30 pips each, 60 pips for the day, done. That's it. All right. So with that said, we'll talk about CAD and some cryptocurrencies tomorrow and the dollar index again. Let's hope it's moved up from this 100 level. Trade well, trade safe, and I'll see you tomorrow. Bye-bye.